The MPC evaluated the domestic and global macroeconomic financial conditions and voted unanimously to leave the policy repo rate unchanged at 4%. After the steep decline into which the global economy plunged in the second quarter of 2020, global economic activity appears to have rebounded sequentially in the third quarter, but unevenly among and within economies. Improvement in manufacturing, labor markets and retail sales powered strong recoveries in some countries, whereas in others a rise in new infections prompted a slower pace of unlocking or reimposition of restrictions, which in turn stalled the upturn. Generally, investment has remained in retrenchment, while consumption and exports have started to improve. Massive policy support across all countries has prevented a deeper downslide, providing a floor underneath employment, household incomes and businesses. Financial conditions continue to remain benign. The Indian economy is entering into a decisive phase in the fight against the pandemic. Relative to pre-COVID levels, several high-frequency indicators are pointing to the easing of contractions in various sectors of the economy and the emergence of impulses of growth. Rather than enumerating them here, I have, in the interest of time, set them out in an annex to this statement, and this statement will be uploaded immediately after I make the statement before camera. By all indications, the deep contractions of Q1 2021 are behind us. Silver linings are visible in the flattening of the active caseload curve across the country. In September 2020 round of RBI survey, households expect inflation to decline modestly over the next 3 months, indicative of the hope that supply chains are mending. Our projections indicate that inflation would ease closer to the target by Q4 2021. Our other surveys, also conducted in September, indicate that consumer confidence is turning upbeat on the general economic situation, employment and income over a 1 year ahead horizon. While the current assessment of the overall business situation remains in contraction in Q2, it has moved up from a low in Q1. Forward-looking business expectations are optimistic on the overall business situation, production, order books, employment, exports and capacity utilization. The Manufacturing Purchasing Managers Index PMI for September 2020 rose to 56.8, its highest mark since January 2012, supported by acceleration in new orders and production. The Services PMI for September at 49.8 remained in contraction but has risen from 41.8 in August. These expectations are also reflected in our growth projections, which suggest that GDP growth may break out of contraction and turn positive by Q4. Sectors that would open their accounts the earliest are expected to be those that have shown resilience in the face of the pandemic and are also labor intensive. Agriculture and allied activities, fast-moving consumer goods, two-wheelers, passenger vehicles and tractors, drugs and pharmaceuticals, and electricity generation, especially renewables, are some of the sectors in this category. In several of these areas, reforms such as agricultural marketing and value chains encompassing cold storage and transport and processing, changes in labor laws, and creation of capacity for production and distribution of vaccines have already opened up new vistas for fresh investments. Manufacturing firms expect capacity utilization to recover in Q3 2021 and activity to gain some traction from Q3 onwards. Both private investment and exports are likely to be subdued, especially as external demand is still anemic. For the year 2021 as a whole, therefore, real GDP is expected to decline by 9.5%, with risks tilted to the downside. If, however, the current momentum of upturn gains ground, a faster and stronger rebound is eminently feasible. The RBI stands ready to undertake further measures as necessary to assure market participants of access to liquidity and easy finance conditions. The RBI has assured that the borrowing program of the centre and the states for the rest of 2021 will be completed in a non-disruptive manner without compromising on price and financial stability. In pursuit of this objective, the limit for ways and means advance for the centre has been kept at 1,25,000 crores compared to rupees 35,000 crore in second half of the previous year. Similarly, the 60% increase in WMA limit for states in the first half of 2021 has been extended up to 31st March 2021, that is by another 6 months. We will be issuing the notification for the auction, that is for the OMO purchase auction to be conducted next week, and its size will be 20,000 crores. That notification will be issued after this statement is over. Yields in government securities GSEC market, both primary and secondary segments, also need to evolve in alignment with comfortable liquidity conditions. This is important for those segments of financial markets that rely on GSEC yields curve as a benchmark for pricing financial instruments so as to benefit from easy financing conditions engendered by RBI's policy measures and operations. Large excess supply conditions characterized food grains and horticulture production, and the outlook for agriculture is bright. Crude prices remain range bound. The MPC has hence decided to look through the current inflation hump as transient and address the more urgent need to revive growth and mitigate the impact of COVID-19. This has provided the space for continuing with the accommodative stance with forward guidance as set out in the MPC. Accordingly, it has been decided to conduct on-tap TLTRO with tenors of up to 3 years for a total amount of about rupees 1 lakh crore. Total amount of rupees 1 lakh crore at a floating rate linked to policy repo rate. The scheme will be available up to 31st March 2021 with flexibility with regard to enhancement of the amount and period after a review of a response to this scheme. I am going to announce the round-the-clock availability of real-time gross settlement system, that is round-the-clock availability of the RTGS facility. In December 2019, the RBI made available the National Electronic Fund Transfer, that is NEFT system, on a 24/7/365 basis, and the system has been operating smoothly since then. In order to facilitate swift and seamless payments in real time for domestic businesses and institutions, it has been decided to make available the RTGS system round the clock on all days from December 2020. India will be among the very few countries globally with 24/7/365 large value real-time payment system. Thank you very much. Stay safe, stay well. Namaskar.